Good evening, traders. It's 8:15. We have literally just had the Federal Reserve raise interest rates by 50 basis points. And what have we seen? Have we seen the dollar appreciate, or have we seen it depreciate? Well, the initial reaction was to see the US dollar appreciate as the news was released. But then as the Fed Chair Jerome Powell started to talk, we've seen a little bit of a correction. We'll wait to see the dust settle, but I think it's been more of a case of buy the rumor, sell the news, or sell the fact, whichever way you like to say that saying. Right now we're seeing the dollar selling off. The turbo dollar that we saw through April was obviously the impact of inflation. The market's talking about how much the Fed are going to rate hike and how much they're going to rate hike throughout 2022. There was one comment that really did start to see the markets turn, and especially looking at the Nasdaq now 320 points up. So I'm just going to draw your attention over to this little section here. 330 points up right now on the Nasdaq. This was down about 160 points earlier. But what was the turning point was when he said that the Fed haven't yet considered a 75 basis point rate hike, which I think the market was potentially pricing in. We can see across the market right now the dollar is selling off. The euro 76 points up. It was at one point around 94, 95. We're seeing the sterling up 79 points. We've got gold up $18. Aussie USD up 124 points. So we're going to see some nice moves on Aussie and Kiwi on the basis that we're seeing these markets, the indexes, taking some nice turns to the upside. There's a couple of key barriers we need to watch on the indexes, and we'll come to those. So the question is, do we buy USD or do we sell USD? Over the last week or two, no, even longer, I've been saying that I didn't want to be a buyer of US dollar where it currently sits. I was watching this ascending trend line, and then price broke out. And then if I zoom out to the monthly chart that we were on, you see we've got these highs through here where we've got the closing price at 102 basically, with wick highs around 103. The whole area just didn't give me real interest in buying US dollar. Obviously there were some markets that were very weak, and that was predominantly the risk assets being Kiwi, Aussie, and Canadian dollar. There was some opportunities, but there was nothing really to sell those markets against other than the US dollar. I wasn't active because I didn't want to be buying the US dollar, and as I've previously mentioned in the videos. But this is where I can see we could get a decent correction on the USD before we then start to look for those USD longs. And where would we like to do that? Well, the question is, right now the market is seeing this as positive for stocks. Initially we're seeing some rally in stocks, we're seeing some selling off in USD, so automatically the follow through goes into the likes of, we're seeing long gold, and we're seeing long euro, long pound. That's at the moment, but we've got to just have a look and see where these markets could give us opportunities and what could present itself. So we're going to drop down to the daily now on the dollar index. I'm going to look for our next sort of areas of interest. So we've got the monthly pivot sitting in here at 101.76. That could see a little bit of a correction. It would also be a retest of the ascending trend line it broke out of. So we could watch smaller time frames to see how the market reacts in and around this area. So see if the market pulls back down, we see some of the smaller time frames do this, and then we can start looking for long dollar. Or we're going to break through this area and break through the monthly pivot and then start running down into these areas. Obviously my preference would be to see a little bit of a deeper correction so then we can start looking for more upside in the USD. So that is my preference, a deeper correction, but I've got a plan for either scenario. Let's take a look at the euro, because the euro has broken out of a key resistance area. So we were long from 105s. We did hit our take profits at 105.80. The market then came back down to test 105s, and since we've broken through minor but interesting area to basically look for long opportunities yet again. So this is what we're looking at, this area here, this grey zone, sort of around 105.60 to 80. This area here where price is currently testing. So what I'll be looking for in this region, let's just get rid of this. I'll be looking to see price turn. So anything in the next sort of 15-30 minutes, or even a 5-minute sort of change in cyclical pattern, if we can remain above this area through the evening session, and then we get to see some sort of buyers come back in through 105.70, 80, I'll be looking to buy around these levels. So I just want to see the market turn and buyers come back into the marketplace here. If we then close back below, well then that could be a clue that USD buyers have seen this little bit of a sell-off as an opportunity to buy USD at a better price that they probably didn't think was going to happen. So this is going to be the battle that we face. But as intraday traders, we can be watching this, and I'll be coming back through tomorrow's session and looking to see if we can, tomorrow London session, see if we can either stay above sort of 105.80 or if we come back below it. Either way, I'll be happy to trade. The key area for the US dollar is going to be 104s. We get above that, we can get long, because that will give us very much clear headroom to continue trading to the upside. But where we currently lie, I think if we can see buyers step into the marketplace anywhere around here, should present decent opportunities going forward. Now GBP, the levels aren't as clear, but I do have more interest in buying pound because of the commitment of traders report. So what does the commitment of traders report show us, and how are we meant to interpret it? Well, there's two sides to the commitment of traders report that are worth reading into. One would be the commercial activity, who currently, or not currently, would generally hold around 60% of the market participation. And then you would have so commercial traders would be anyone that uses the financial markets to facilitate business transactions, easily either known as user or producer. Then you would have something like the non-commercials. These are speculators, use the market purely for making profits and returns for either themselves, their investors, or let's call it the banks, or family offices, anything like that, investment banks, any investment arms, private equity, whatever. So they would be what you would call the trend followers. So anyone that would be speculatively buying this market would generally be following the trend. Commercials use it for a different perspective, to facilitate transactions. So they want to buy more of something the cheaper it gets. That's the simple rule of thumb. They want to buy more of something the cheaper it gets, because then they're locking in profits, or they're locking in the bottom line for future earnings. So a simple analogy would be Starbucks. Their main product that they sell is coffee. So coffee beans, the more expensive it gets, the less they will buy, but just enough to run the business. The cheaper they become, they will buy more and more and more, because they'll stockpile them, because what that does is that future-proofs profits in their sale of drinks. Okay, so the same with currency. You've got international corporations that are facilitating business all around the world. Therefore, they want to buy GBP the cheaper it gets, to cover rent, wages, insurance, purchasing products, manufacturing, services, etc. So that's why you would buy more of something the cheaper it gets, even though you may look at it and go, the trend is down. So when we look at the commitment of traders report, what we can see from the commercial activity is that there's a lot of activity in buying GBP now, and that's a futures market, so that will relate to any GBP market. So the one that we can find the clearest levels and the clearest technical opportunities. So just looking at it right now, I can see that around 126, if we can get above 126, then I'll be more interested in looking at, say, GBP USD doing something like this, and then we can run that back up and towards the 128s, where we've got the bottom of the channel, and then the next zone above that is going to be around the 130 even handle. So that'll be something to look into. I'm not going to look at gold tonight, but I am going to look at Aussie dollar, because this is obviously very important into how markets indexes moves, with it being so closely tied to the risk on risk off scenario. and you'll see that the 0.7, this was the zone I've been watching for. I've been looking for price to come into the 0.7, but obviously we didn't quite get down there today, and this market has been operating. If I can just show you the technicals that it's been operating within, and something that I was looking to trade to and from. So we've got a couple of patterns that had been formed, that have been broken. So if we just go further out, we've got the broadening wedge that had been formed. We broke out of that with a weekly engulfing bearish candle, and then as we were coming down into the 0.7, this was something I discussed in our morning webinar on Tuesday with all our members, which is that this formation that's being created right now is kind of an exhaustive formation. It's not very impulsive, and I was looking at this rally into here and was hoping that today's move could push us down into the 0.7, where I'd look for a speculative purchase, and then I'd be looking for longs once we break out of this formation. Now we've done that, so tomorrow this will be an opportunity. If we still see positive sentiment into the risk markets and indexes continuing to move higher, then I'll be looking for a pullback and get long these markets, only towards 7,500, because there's going to be a couple of things to look at when it comes to let's have a look at the S&P. When we're going to come into some critical areas, so 4,300 and in and around here, where we've got the monthly pivot, and we've also got this structure here around 43.05. We get above this area, then we should see some. Let me just draw that in so you can see it a bit clearly. So we've got the 43.05, 43.10 area here. This purple line in here is my monthly pivot. So if we can get above these two areas, then I think we should see continuation back up into towards the 44s, 44.50s. We do have a descending trend line we can watch out for potential rejection. So these are a couple of things to watch out for, but if we get above there, then I'll be looking for continuation long on Aussie dollar. Take a look at the NASDAQ. So the NASDAQ, Nolan sent out a video the other week about how 13,000 was a key area to watch for. Well, we also had this late trade on Friday, which we closed out when price matched these lows over here. We closed out on Friday. It was only a 0.5% return on the trade, or 0.6, but what we can see is price is doing something very similar here. We've got this 13,600 key level in and around the monthly pivot. So we've seen price test this same area several times with a strong sell-off. Question is, are we going to see that again? It's going to be tomorrow now. Price could potentially get in there tonight, but if we get above this tomorrow, then expect to see more upside on these markets, and like I said, we'll see more follow through on those risk currencies. So that's Aussie, Kiwi and CAD. The traditional sort of risk on market would be looking at Aussie yen as well, so don't rule that one out. In fact, how long have we been going? Okay, I'll have a quick look at Aussie yen. We've got about another minute or so. I like to try and keep these videos just under 15 minutes if I can. So we're going to go up to key area here, 94. This is the one to watch out for. That'll probably tie in with the indexes as well. Watch the indexes that I just highlighted, 13.6 and 14.310 on the S&P. So put your alerts in here. Look for those to correlate with the indexes, 14.310 on the S&P, 13,600 on the NASDAQ. If they all come in at these points at the same point, and then you see some rejections, then choose your poison. I don't like to sell indexes, so I would, if I was going to choose a market to sell, I'd be looking to sell Aussie yen. I would be a buyer of indexes. I only buy indexes. So if I was to choose which one to buy, Aussie yen or the indexes, I'd be picking probably one of the indexes. And looking at the way the NASDAQ was shaping up, I think it was probably a cleaner chart for me to look to trade. Alright guys, on that note, I think we will wrap up there. Hope you had a fantastic bank holiday weekend. It's going to be a short week this week. We've got 2 of these in the UK throughout the month of May. And on a final note, if you have enjoyed today's content and you do like the content that we are putting out there for educational purposes, give us a thumbs up. It makes a huge difference to us, and gives us motivation to keep putting out more content for you. And if you haven't yet subscribed, click on that subscribe button, and it just means that every time we publish a video, it's going to come straight to your inbox the second it's published. Have a great night, guys, and we'll see you tomorrow. Bye bye.